Before you place your first trade, you need to understand the market you're entering. Most beginners skip this part. Don't be one. So grab your coffee and let's get started. Before we talk strategy, we need to understand what we can trade. When people say I'm a trader, they can be trading one of many things. Cryptos, forex, commodities, indices, equity, you name it. Think of instruments as instruments. You need to learn it, practice it, and understand it before you even get good at it. So let's start off with crypto. What is crypto? What is blockchain? Crypto is basically digital money. No banks print it, no government controls it, and lives completely online. It's basically what it says in its name. It's a currency. And what is blockchain? Imagine a giant notebook recording every transaction. And instead of one person owning it, millions of computers around the world share that information, verify it, and keep it honest. That, in a nutshell, is blockchain. So why is crypto the hype right now? Unlike other instruments, it trades 24/7. It moves fast and has huge volatility, which is exciting, but also dangerous. Similar to crypto, we have forex, or foreign exchange. Forex is the biggest market in the world. You're basically trading currencies. It's the dollar versus the pound, GBP versus JPY, and so on. In compared to crypto, which trades 24 hours a day, 7 days a week, forex trades for 24 hours a day, 5 days a week. It's super liquid, but the movement is a lot more steadier than crypto, which makes it great for traders. Now, in case of stocks or equity, think of it as you buying a small slice or a small share of a company. And when you're trading commodities, you're trading physical goods like gold, silver, wheat, coffee, anything that has supply or demand in real life. However, for crypto, there is no factories or any physical items. Its value is based on the tech or the adoption of that tech in the market. And next up is indices. Think of you not betting on one company, but the market that the companies are involved in. Indices like the Nasdaq or the S&P 500 are a good example for that. And that was simple understanding about the main instruments of the market. Now that you know what to trade, you need to know how to trade it. The 3 ways that I'll be covering today are day trading, swing trading, and long-term trading. So what is day trading? It means you're in and out of the market on the same day. You need to make quick decisions and move fast. Swing trading, on the other hand, is where you would hold your position for days or even weeks. It's less stressful, but you gotta be more patient. And long-term positions is where you would hold your position for months, even years. It means slow, but a steady growth. None of these are better than the other. It's what fits your lifestyle. If you have a job and cannot spend a lot of time studying the market, you would rather stick to long-term trading. However, if you have a lot of time on your hands and you have the time to study the market, you could do day trading. You could give that a try. But we will be sticking to swing trading. It has the best of both worlds. And yeah, I can hold positions for longer without having to worry to close the trade the same day. And I don't have to wait for months or years to see results. By the way, if you have any questions, drop them in the comment below. Seriously, even if it feels basic, we can work on them together, step by step. That's the entire point of the series. Alright, that's it for today. In the next video, we'll dive into how trends work and why every trader should understand them. See you in the next one.